So basically, when you go to a typical European investor or American investor, it's generally very, very straightforward and scientific, which is you take your marketing book, you say hello, you present page 1 to page 30, thank you very much, and you leave, right? Here in the GCC region, it's quite different. So here the social aspect is extremely important.
Ladies and gentlemen, welcome to another Pioneers Pathway podcast. Today, unfortunately, I am not joined by Liam at the minute, but hopefully he will be joining us shortly. But who I am joined by is a very special guest, Dr. Ryan. So, Dr. Ryan, welcome on the show.
Thank you very much for having me.
So, Dr. Ryan, do you want to give us a brief, background about yourself to our listeners?
Absolutely. So I'm originally from France. I grew up in France, went to university in France, and I have a PhD in applied mathematics, so specifically financial econometrics, where I've worked on contagion effect between financial markets. I started my career as a quant trader in the credit derivative space, and then I evolved into portfolio management, then head of portfolio management, and then in 2008 I came to the UAE to work for the federal government. For 7 years, and then I became the CEO of a major financial service group here in Abu Dhabi uh, until late 2021, where I left and basically to create New Vision Wealth Management, which is a wealth and asset management company here in Abu Dhabi.
So, what inspired you to get into wealth management in the first place? Because obviously you started out in quant, and obviously, as you're very well aware, there are lots of aspects to finance. There's private equity, there's venture capital. I don't have to give out a full list, but what was your inspiration to go into wealth management?
Well, I started my career as a credit derivatives trader. It was really fun because was a very vertical specialization to do. Now, as you do it and you move into portfolio management and you get exposure to institutional investors, ultra wealthy investors, etc., you realize that actually the world is much wider than the bubble you are in, the vertical you are in, that you're doing. So you start, as you rightly mentioned, you learn about private equity, you learn about liquid markets, you learn about real estate investing, later on crypto. So you realize that the investment world is actually a very wide scope um, area. So wealth management is a very generic term. Wealth management encompasses many, many things. It's wealth management, and wealth can be into anything. It can be into liquid markets, it can be cash, it can be property, can be inheritance, etc., etc. So this is when you realize that optimizing investments for clients rather than just a vertical, but optimizing it across asset classes to build a portfolio for this client is something actually much more exciting than being just in one vertical, which is credit derivatives. Um, in wealth management for the wealthy, I often get this question, especially from the younger generation who are used to very high returns. Um, Wealth management also is not about creating wealth; it's about wealth preservation. So the wealthy people we manage money for have become wealthy through their businesses. What we do for them is we preserve that wealth. Our role is not to create wealth.
Great. And do you find that's a common misconception these days? Or has this
Uh,
always been, a trend where people have thought that wealth management has always been, generating wealth rather than a mixture of preserving it and creating it?
Absolutely. So if you go to the country of wealth management, so there's a very specific country on earth that has become the specialty or the hub for wealth management. It's Switzerland. So Switzerland has been really the hub for wealth management for decades now. It's the go-to place if you would like to save custody wealth and have it managed. The model there has always been wealth preservation and not wealth creation. When a wealth manager tries to create wealth for his clients, he's no longer a wealth manager. Okay. This is when he becomes an investment manager or a trader, which is something completely different. A wealth manager, part of what he does is hire investment managers and hire traders on an outsourced basis for specific buckets of the wealth of an individual. However, the role of the wealth manager is to have a holistic view on all of the portfolio, keep risks at bay. So there's an agreement that is reached with the client whereby certain levels of risk are not exceeded. So when we feel risk is becoming too low in one part of the portfolio, we're able to increase it elsewhere as to keep a certain level of risk across the portfolio and to achieve certain returns that allow the wealthy individual to preserve his wealth. A wealthy individual is not actually someone who's sitting at home or on his yacht not doing anything and waiting for me to transfer money to. No, most wealthy individuals are actually workaholics. They have companies all over the place. They're very competitive. They want to make more money. And this is how they create wealth. They handle wealth creation and I handle wealth management and wealth preservation. So yes, you're right. Today, it's a big misconception, and specifically with the younger generation. So the younger generation today, you are the generation of Bitcoin and altcoins and stable coins and Nvidia, and so these are the assets that can jump 10% per day, 15%. This is what we make a year at my time. So today, when speaking with the younger generation, yes, there is this disconnect about returns. So they often expect returns that you generally accomplish when you're dealing in drugs or when you're placing your whole portfolio into a single very funky asset like Nvidia or Bitcoin. So this is where there's a lot of awareness that has to be created or education to be created, is that yes, these assets can jump. And we've had this. In year 2000, Cisco was the only company that produced routers in the whole world. And the internet came to be. So you did expect Cisco to go to the moon. And it did. But what happened 6 months later? It literally gave away all of its returns. And lots of wealth was lost in the process. And that's why wealth management is about diversification. So education is very important to explain the merits of diversification.
And do you find that, there's a group of investors who've got, wealthy quite recently who are unaware of, such practices?
Um, well, being aware, I'm not sure if I would use this word. Um, Again, most of them are on the younger side. Most of them have not had very advanced university degrees, and rightfully so. Sometimes advanced university degrees are important, and in other cases, with entrepreneurs, it's not really needed. So usually when you go for advanced university degrees, specifically in finance and economics, you learn the merits of diversification. But when you haven't done it, you don't really get it. The second thing, and this is where there's some disconnect there, is that diversification becomes a drag rather than an advantage. So yes, this new wave of investors or certain portion of these new investors, they do not want to diversify. So they believe in Bitcoin. They hodl, right?
Yeah.
So they accumulate. And many of them have made a lot of money. And this is where I ask them, well, Bitcoin is a fantastic investment, okay? But putting all of your money in it, I'm not sure. Because I asked them, so what do you drive? How did you come here today? They'll tell me where I came with my Porsche 911 GT3. It's like, fantastic. How did you buy it? So, well, I went to Porsche and I bought it. I said, but how? How did you pay for it? He said, well, in dollars. Oh, but I thought you invested only in Bitcoin. Can you pay with Bitcoin? You buy the Porsche in Bitcoins? No. Well, that means you still need US dollars, right? So you're exposed to US dollars, interest rates, inflation, etc., etc. So this is where I try to attract their attention that there is more to it than just one asset. So again, it's a lot of education. Now, there are many, many others as well who do wake up to the fact that diversification is important. So they have the engine of their portfolio, which is generally the asset they like. whether it's deep tech, Nvidia, Bitcoin, or anything else. And then they have a very nice alternative portfolio where they have real estate that generates income for them. Because Bitcoin does not generate income, right? Nvidia doesn't really generate income as well. So you need income, and they have property in their portfolio. So it's a hybrid generation, I have to say, between very, very focused uh, to getting into diversification.
Yeah, no, absolutely. I completely agree with you because it's a very valid point, especially that we see in the last, 10, 15 years, the idea of behavioral finance. I think generally what we find is a lot of younger guys in general, they have this overconfidence about them that, all this wealth that I have, it will stay with me my whole life. But in reality, that's not the case because what they tend to do is they tend to, burn through it. But thinking back to, I don't know, say a more, savvy investor. So how would you advise one of them to go about their long-term, wealth strategy?
So we basically work backwards. I ask this person, and this is where I try to confuse that person intentionally to wake that person. Even though even a 60-year-old investor, as much as I do it with a 25-year-old investor, tell them, okay, so what's your goal? Why do you want to invest? Is it to buy a car? Is it to buy a yacht? Is it to ensure your children get the right education, etc.? They tell me whatever. They want to ensure that one day they can retire with $10,000 per month. Fine. What age would you want to retire? Tell me X. How much money do you have today? And then I pull up the Excel sheet, do some simulations, and I show them what and why they should invest certain things and not other things so they can reach that target. So it's always working backwards. And this work backwards always wake up the investor that is in front of you. So it brings down back to earth certain expectations, certain hopes sometimes of achieving something. So the short answer is literally working backwards. What's your docket? Where do you want to be? What's your financial goal? And work backwards. And this everyone should do. Absolutely everyone should do. Having just, I want to make 20% per year. For what? Okay. So always be working backwards.
And so, do you find there's, a difference in terms of obviously there is a difference, but what would you say are the major, differences that you notice between, say, that 6-year-old investor and the 25-year-old investor? Obviously, the 6-year-old one would prefer short term, and the 25-year-old would obviously want something long term. But are there any, other key differences that wouldn't spring to, a
Absolutely.
layman's mind?
Absolutely. So let me tell you, I'm an old guy. I personally like very much when I go to Switzerland, I sit with my private banker and the nice fancy meeting room with wooden walls and nice paintings on the wall. He gives me my statement on very fancy paper. He sits down for 2 hours telling me about things that I absolutely know, being very, very nice with me. And at the end, he's slashing me 2% per year. You know what? I'm a sucker for it. I like it. Okay. Now, let's talk about my daughter. So my daughter, every time I tell her I'm going to see my banker, she falls off her chair with laughter. So why? Why do you need to actually physically go to your bank? So she pulls her mobile and shows, I'm not going to do any publicity, but she shows me an app of a company where she does everything. She has her account, she transfers money in and out, she lends money to her friends, she buys Bitcoin, she buys Nvidia, she makes wire transfer, everything on her mobile. She tells me, I've had this for 2 years. I didn't have to speak to a human being for 2 years. This is the new generation of investors and finance users that we're getting today. So today, when you speak with, and sometimes I meet the sons of billionaires. They come here, I meet with them, and the fathers they want me to talk to the son or the daughter and tell them about investing, etc. And they're absolutely not interested. They want to do everything on here, everything. They don't want to talk to a human. It's the TikTok generation. It's the Instagram generation. Swipe up quickly, fast, signing documents and sitting discussing risk. They don't want that. They want quick things. And the answer to that, so you want to do private equity. Investing into private equity is something very tedious. due diligence, SPAs, agreements, etc., right? Wiring the money. So today there's an answer to it for the younger generation. It's fractionalization. It's tokenization. It's something we're doing today. So we've done the first tokenized fund in the whole Middle East recently on treasury bonds. Because now today there's a whole generation of young investors who do not want to go open the brokerage account, wire money, settle the treasury, go into reinvestment risk. They just want to buy tokens, right? They want to go on their favorite virtual asset application and buy the token, period. It's actually very simple and it settles on the blockchain. So this is the answer to it. This new generation of investors, they do not want to invest in the traditional way. So I've discovered that they are taken aback, not by the investment itself, but the process of investing. So take funds, for example. When you want to buy a unit and a fund, you have a transfer agent, you have the fund administrator, and then you have to settle redemption, subscription. It's a tedious process. Today, with tokenized funds, super easy. You go on the virtual asset app and you buy the token. See, it's very, very simple. So, and I hope we've cracked it in the sense that we made it easy for them. You know what? You want to buy traditional assets? We'll do it for you in a way you like it, just tokenization or fractionalization. So I think this is the answer to reconcile traditional finance, TradeFi, with DeFi, with decentralized finance. I think this is the bridge to bringing in the new generation of investors that we're seeing today.
And it's pretty evident that and you've outlined as well the way investment has changed because of technology in the past few years. But what do you expect going forward in the next 5, 10 years? I mean, I know it's a $1 billion question, but just wanted to get your thoughts on it.
That will depend on so many factors, but I do think that the way we invest and the way we bank will change over the next 5 to 10 years. I do think that banks, as we know them today, they're living their last days. Banking as we know it will disappear. You will not need an actual bank in the common sense of what we
A
have today.
physical, store.
Precisely. Yes, yes. So everything will become digital, electronic, on mobile apps, quick, scanning documents, signing. This is going to go. Okay. Second, the fractional banking system, which, as you know, you put $1 at the bank, they keep 25 cents in reserves, and they lend out 75. So all of this will change, in my opinion. So we're going to see more um, lender and borrower connected more directly than having to use a bank to do this system. And we've seen the limitations of fractional banking in the times of crises. I mean, in 2008, when the crisis hit, the US economy and the US banking sector was on its knees, right? So I think this will disappear thanks to technology. We could have done this 20 years ago, but the problem is that we did not have the computing power to accomplish that target. We did not have computers that could do blockchain settlements in seconds. Today we do, thanks to the GPUs, thanks to the semiconductors that are being produced. This is all possible today. Okay. So I do think that the traditional finance, the way we do it today, will completely evolve and change. Even buying real estate will become seamless through fractionalization. And I think this will also impact the assets we invest in. So thanks to the ease of or easier ways of investing into things, I think some assets like real estate, where the younger generation is like, oh my God, no, it's too much paperwork, they might look at it in a more favorable way. And I'm hoping this will take away a bit from the very overvalued asset that we're seeing today, particularly in the US, like the 7 tech stocks, that the famous ones with PEs above 50, which is absolutely senseless. I'm hoping that this will redirect these investments into more traditional assets through that bridge between TradeFi and DeFi.
Yeah, no, absolutely. I agree with you. I also think the point of, us being able to, go to a digitalized system was also, slowed down by the difference in generations. Obviously, the elder generation, if you told them you could do everything on your phone, I think they'd be shocked, to be honest. I still think that a lot of them don't trust the technology today as it is. But obviously, as we get, we have more of a younger generation, they are more trusting of it. I think I completely agree with you. We will see, an increase in that. But another thing is, would you say that, alternative assets, maybe asset classes that we haven't even heard of would, emerge out of, all this increase in digitalization technology?
Absolutely, absolutely. This will happen more and more. Let me give you a parallel, for example. Carbon credits. Would have never imagined that it's something that would become tradable one day electronically and in a digital way. Um, while whether you believe in it or not, many people don't believe in it, others do. This ESG, etc. But it's undeniable that today there is pollution. It's undeniable that there is an issue with the environment because we've become too much industrialized and we need to counterbalance that. And this is possible today through the digital world. Before, it was not possible to digitize these assets to make them tradable, exchangeable, and extract value out of them. So I think technology, yes, absolutely, it will completely change many things we invest in. But in my opinion, the most important part in this is private equity, private investing, and real estate. So today, one of the issues we're facing, and to get into economics a bit, the United States today, if you look at the economy of the United States used to be a manufacturing country. It used to be a country where there's IPs, there's a product that sells and that is manufactured. Today, the United States, most of the GDP have become stock market related. It's no longer a manufacturing economy. It's no longer an innovation economy. It used to be. Innovation has gone somewhere else. So innovation requires something very important called SMEs, small and medium-sized enterprises. These are the companies that create ideas and transform them into an MVP and then produce them, a minimum viable product, and then produce them. So SMEs, they need funding. And the funding they used to get is either through VCs, where they get annihilated through that funding, or through banks. But today, thanks, and it started with crowdfunding platforms, as you probably know. But today, when I, as an individual investor, I am able to fractionalize and lend a specific SME that I believe in their product, this will change the way funding happens. It really cuts it short. And I think this is very important for younger generations to look at certain ideas they really like and be able to invest into it directly without having to go through a VC or through a bank to do that. Doing it directly. So this will literally change the way an economy is shaped and built.
Yeah, actually, on the point of innovation, I would actually argue that the innovation is still there because you see all these, tech startups. A majority of those have been coming out of the USA. So, what are your thoughts on that?
Perfect. Tell me, what do they produce? What do they produce?
It's just,
It's apps. We're
yeah,
getting apps, right? So
yeah,
an app is a service. It's not a product, right?
yeah.
So let me take you back in time. Do you know when the first electric car was manufactured in the world?
I don't have an idea, to be honest with you.
In the 1930s in the United
Wow.
States. It had a battery. It had a range of 32 kilometers. Can you imagine? 1930s, 100 years ago, we had the first electric car, 32 kilometers range. What happened then? Then the oil cartel came in the United States, the oil producers, and they basically literally shut it down. They couldn't get funding to continue working on electric cars because the US wanted to sell oil. So petrol cars were much better. Imagine if we continued with electric cars 100 years ago. Today would probably have electric cars that have a range of 5,000 kilometers, right? The technology would be completely different. So it's about the product and not the service. Um, Innovation is not through simple differentiation. And let me explain. This is an iPhone. I'm not doing a publicity for iPhone. What's the difference between this iPhone and the iPhone 14 or 13 for them? None. So it's a small differentiation that is happening. This is not innovation. Innovation is what makes an economy leap upwards. It's what creates GDP. This does not create GDP. Differentiation does not create GDP. Innovation is something disruptive that changes the way we conceive things. So when the iPhone was introduced in 2007, absolutely, that was pure innovation. You know it's innovation when when it destroys something else. And this is the theory of creative destruction by Schumpeter, right? Um, when a new innovation destroys an old technology, then you know this is innovation. What did the iPhone destroy? It destroyed Nokia and it destroyed the BlackBerry, right? This
Yeah.
was innovative. It's a product that today helps us be productive and do our work much better. And this, I think, what we don't see today. This is what we don't see today in the United States.
Understood. So I want to focus more on your journey in establishing NeoVision. So how did that, come about? Because obviously traditionally you'd worked up the ranks in wealth management, but obviously you run your own practice these days. So what's that like?
So the idea behind NeoVision Wealth Management is to become a place where we can do funds and structures as a service. This is the niche service we provide. So let's say you have this fantastic investment idea. You've been running it for months or years, but it's not institutionalized. You're just doing it on an account basis with a broker. But you would like to institutionalize it and create a fund and bring in third-party LPs. But you do not have neither the experience or appetite to go create your own fund management company to create that fund. Then you come to us. So we have a very wide scope license. What we do is we create a fund for you that is white labeled, fully serviced, and then you can implement that strategy into that white labeled fund that we service for you, right? Under our own license. This allows that fund to grow, accomplish a track record, which would attract third-party LPs. The same thing is done for family offices. And this is the wealth management part. In many cases, family offices, they would like to create funds for the family itself to organize the wealth of the family. To do so, they again will have to get the fund management license, but they do not want to create a fund management business. So they come to us. We create a fully fledged structure for the family office, top to bottom, operationally streamlined, tax efficient, succession proof. And then these investments are moved under these bunch of funds. Again, it's a structure as a service. So this was the idea behind NeoVision Wealth Management. So today we are the leading fund platform in our jurisdiction. We have two companies in the UAE, one in the financial zone of Abu Dhabi and one onshore in the UAE under the federal regulator. It's two different companies. And then we have a subsidiary in Switzerland, the country of wealth management, where we're regulated by FINMA, where we can offer wealth management services to our clients out of Switzerland as well.
Understood. And establishing your own practice is never easy. So what sort of challenges did you face along the journey?
So the typical challenges of startup life is when you start with the funding, right? And then you start consuming that funding, and your revenue didn't come in yet to make that reversal in that net net loss or net profit drop that
In
you're
the cycle,
facing.
yeah.
Precisely. So it's like jumping off a cliff and you have to assemble your parachute while you are falling. This is startup life. So you want to do things as quickly as possible to generate revenue so you can reverse that drop in funding that you're consuming to build that startup. Okay, so this is the first challenge. It's financial. The second challenge is reputational. You're creating a brand new name in the market. So when we started, when we got the license and started operating in 2022, no one knew who's NeoVision. So we had to create a brand. It's a brand name. What do you do? How do you do it? You're new. Are you sure you can do it? Will you be here in 3 years if I create a fund with you? So you need to create trust. You need to create that I'm ready to go the whole 9 yards, put as much money as possible into that company to sustain it and be here in some time. You're up against some of the largest fund platforms out there. So the branding and creating a brand name is also very important. And the last bit is individuals. It's all about manpower, humans, right? So you need people who believe in your project, who are ready to come in and take the risk to leave their 9 to 5 job, the very secure job they have, or they sure they're going to get their salary at the end of the month, into a startup. It might fail and it might succeed, and do it with enthusiasm and positivity. Um, the human side, the positivity and optimism in that human side is extremely crucial for any startup to function. So that is why the human factor is the third and most important factor in this.
And how difficult was it for you to, find people who had the same vision and, the same cultural passion behind it as you did?
So thankfully for me, it wasn't very difficult. So it was from the previous company I used to lead. I was the CEO of. So when I left, a few of them contacted me and like, whatever you're gonna do, we would like to join you. So I was very flattered, frankly. So as soon as I got the license, I told them I'm ready to roll. So I have a few people from the previous company who joined, and I consider them as friends. I'm not really looking to create a massive international company. Uh, these companies come with their own issues and problems. I'm just looking to create really a niche company that provides the best service out there, that pays its employees very well, delivers to its clients, and that's it. Okay. And I think we're there now.
Great. So obviously you mentioned the international aspect of it, and that's not your aim. That's not your aim at the minute. But you yourself have worked in a few countries. So what's that been like?
It's very enriching. Um, um, so I was in Paris, London, New York, and then in the previous company here in Abu Dhabi, it had regulated presence in Singapore, London, Hong Kong, and Abu Dhabi. So I sat on board of the company in Hong Kong and Singapore. So I used to travel there, interact with the regulator, interact with the clients. Um, this allows you to become more versatile as an individual. This allows you to develop adaptation skills that you wouldn't have had before. When you're meeting with an institutional investor in Hong Kong, it's extremely different than meeting with an institutional investor here in Abu Dhabi. So you have to very quickly adapt, change your stance, fix your marketing book, the way you present things, so that things are delivered in a tailor-made way. So basically, this allows you to develop your tailor making skills. And I think this is an instrumental skill today, because customization today is key.
Obviously, you work with clients all over the world, and we've mentioned you work with people of all ages. And you mentioned you've worked in Singapore as well. You've got experience in France, etc. So, do you find there's any differences when you work with people from diverse backgrounds, different cultures, different visions?
So basically, when you go to a typical European investor or American investor, it's generally very straightforward and scientific, which is you take your marketing book, you say hello, you present page 1 to page 30, thank you very much, and you leave, right? Here in the GCC region, it's quite different. So here the social aspect is extremely important, where for a GCC investor, getting to know you as an individual is more important than getting to know your project. So this is why when you go with a marketing book and you want to see a GCC investor, it's a lot of social talk before, geopolitical talk, family talk, general economy talk. before getting into what you're here for. So for an investor here in the GCC, and this is coming because of um, the oversubscribed nature of the region. There's so many funds coming here trying to raise money that you know what? They don't need you. So you're coming with your fact sheet. They have a gazillion on their desk from a gazillion other fund managers. So for them, they need to get to know you because they believe here the person behind the project is more important than the project itself. Okay. So in many cases, you go with your pitch book of 30 pages, you sit down for 1.5 hours talking about so many things where they're testing you, if you will, seeing who you are. And finally, you only present one page out of your marketing book. They tell you, cut it short. Show me the page I need to see. Okay. And you go to page 26, where there's the information about what you're here to offer, and it ends there. And then you go away. Okay. You think it's not going to happen. And you know what? It happens. And in many cases, you think it will happen and it doesn't happen. So that's why I tell to many people who come here to the region, in many cases in the region here, because of it's a very cordial culture, the road to a no is often paved with yeses. So they welcome you, but because it's they're very polite, but ultimately it's a no. So this is for you to be smart enough to detect whether it's going to be a no or a yes. Um, in Hong Kong, it's a combination of both. It's social as well as very data driven. So you have to strike that balance, not do page 1 to page 30, because no, you'll lose attention. So you have to combine and marry social with covering enough data in your marketing book. So it's a balancing act in the Far East.
And absolutely, it's amazing how, different cultures prioritize different things. So obviously, as you mentioned, in GCC and where I'm from in India, it's a lot about, who you know rather than what you know. Because there'll be 100 guys who have, the same level of skill, not necessarily same, but a very similar level of skill. So, the value of a network is really powerful, isn't it?
Absolutely. Absolutely. And the network is also very important because in many cases people will ask about your reputation. Now, do you know Ryan? Have you done any work with him? Have you heard anything bad about Ryan? So this here in the GCC, it happens to me very, very often where someone calls me and says, well, XYZ has asked about you. And so yes, building a network and planting good deeds with your network always come back positively back at you.
So I just sort of want to understand. We've been talking a lot about your experiences globally, but what's the most rewarding part of it?
The most rewarding part is it's the success. It's when you sign um, a mandate with a massive company that could have easily gone to someone who's much, much larger than you, but they select you. Okay. I mean, this is an absolutely massive win. It's something, the vibe in our office here completely changes when we do that. And we did sign a few with some very large investors that makes us very, very proud. This is instrumental. The second part is you're not an employee anymore. So, and this is something I think most 9 to 5 employees know it, is that knot on the stomach. So when you're going to the office and you have that knot, you have a boss, you have, your KPIs, etc. You don't have that when you're working in an environment that we're creating right now, which is pretty much a startup environment, though we're not really a startup anymore, but I still call it a startup. No one has the knot anymore. Okay. And I asked them. So I have a colleague here. You know what? We have a beach here called Sadiyat Beach. So she'd call, you know what, Ryan? I'm going to work from the beach today. But it's fine. She has her laptop with her. She's going to go sit on the beach. And I know the stuff she's going to deliver during that day will be 10 times better than feeling that she has to come and sit here in the office and do it out of here. And here I'm not talking about working from home, right? It's working the way you like, so you can deliver your best. So this freedom that is given there is, I think, enhances productivity. So it's always good mood here in the office.
Absolutely. It's a pretty interesting thing that you've done, establishing more of a startup culture in finance, where, finance is traditionally seen as the suit and boot. I know in between during the whole, COVID period, they had gone to, a hybrid model. But you see a lot of them shifting back to the traditional 5 days in the office. So it's, pretty interesting that you've adopted that, startup culture where you're pretty flexible, work from anywhere, as long as you're doing what needs to be done. So it's pretty unique and interesting, isn't it?
Not um, humans or individuals or employees, no one feels like coming to the office on a specific day should come to the office. If there's a specific day you woke up, you woke up on the wrong side of the bed, you know what? Sleep until 11. That's fine. Okay. Just today, I need this one thing from you. Okay. You can wake up at noon if you want and deliver to me at 8 p.m. for all I care. But just, it's a human psychology thing. It's not to have to do something because you have to do it. Okay. Do it at your own pace. It doesn't matter. And this is when that thing delivered will be of completely different quality.
Absolutely. So I want to move on to a few rapid fire questions, which
Sure.
I've prepared. So I'm going to ask a few, and then I'm just going to get you to expand on a couple here and there. So, what is the best financial decision you've ever made?
Investing into this company and starting it.
Okay. A book on finance or economics you think everyone should read?
Yes. Well, there are multiple ones. Uh, I'm gonna give you the names. I can give you a couple if you want,
Sure.
if you give me 1 second. So there's one book called The World for Sale. It tells you a lot about energy investing, okay? And how these commodities traders have developed. I'm not gonna name any. Um, you have another one, sorry, The Rise of Carry. That's another book that I absolutely loved, which tells you the story of how carry, which is, you borrow in Japanese yen because rates are zero, and then you convert them into US dollars and you invest them into Nvidia. This is the carry trade, which is a very, very dangerous trade. So it tells you how it's no longer about generating alpha, but it's more about arbitrage, right? So in my opinion, it's quite a dangerous trade. And the last book, for anyone who would like to understand the link between geopolitics and energy, should read the book The New Map, which is by Daniel Yergin, the famous energy expert. You will understand how geopolitics works if you read that book. So these are the three books I would recommend.
Great. One global market you're watching closely?
Well, obviously the United States. It's a primary market that affects everything. So today, if you look at the MSCI world, 70% of the market cap of the MSCI world is US market cap. So if you buy the MSCI world, you have 70% US. So you have to follow it to understand what's happening. The next big thing, in our opinion, is India.
Great. And the biggest myth about wealth management?
The biggest myth about wealth management, um, creating wealth.
Great. Yeah, we
It's
covered
not
that
about
earlier,
creating wealth.
absolutely. The most surprising thing about working in the UAE?
The most, sorry,
The most surprising thing about working in the UAE?
uh, um, the society aspect. So you'd expect things to be very different than what they actually are. It's actually a very, very welcoming country where you easily feel at home.
Great, Ryan. It's been an absolute pleasure to have you on here today. Can you tell our listeners more about where they can find you and your work?
Absolutely. So I'm an influencer on LinkedIn. I post very frequently on LinkedIn, namely on financial markets economics, and I do sometimes post funny stuff. I call it the weekend humor. It has it has lots of followers. I do have a YouTube channel where I put all of my TV interviews. So I do on average three TV interviews per week. Sky News, CNBC, Bloomberg, etc. Some of them are in Arabic, others are in English. They're all on my YouTube channel, which is Ryan Lemand, and it can be found very, very easily. Otherwise, for the academics, I have an academic side, so I do publish academic articles, which also can be found by just typing my name on Google.
Great, Ryan. Thank you so much. It was an absolute pleasure to have you on.
Thank you for having me. It's a pleasure.
Thank you.